Hey guys, it's Vivian, your hot stock girl. Today I'm going to discuss the risks you take when you invest. Investors who buy individual stocks take on a much higher risk than investors that buy funds. If you buy individual stocks, be prepared to do more homework about the companies you own than you ever did in school. The risk in individual stocks is everywhere, and quite often you don't see that risk coming when you buy your stocks. Many investors prefer to buy utilities because they are large, stable companies that usually pay a healthy dividend. Utilities include companies that provide electric service or natural gas services to people's homes. Pg&E is a natural gas and electric company that operates mostly in Northern and Central California. Pg&E has over 107,000 miles of electric distribution lines in California. That is a very big responsibility. The company has a duty to properly maintain these distribution lines. At any given time, one of these power lines can fail and a fire could occur. As many of you know, there was a major fire that broke out on Thursday, November 8th near Camp Creek Road in Butte County, California. It started as a brush fire under Pg&E's power lines near Polk Dam on the Feather River. It is believed that one or more of Pg&E's power lines were the cause of the fire. My deepest condolences go out to the families affected by this tragedy. This tragedy has taken many lives, so my goal here is not to discuss Pg&E's stock, it is to help investors get a real-world understanding of risk. Every day when we venture out in the world, there's a risk that an undesirable event may happen to us. We could cross the street and get hit by a car, or we could get struck by lightning. Now, the odds of these events are very low, but undesirable events happen all the time. If you are a stockholder in any company, you are an owner of that company and subject to every risk the company has to deal with. It is very easy to sell your stock if a company is involved in a tragic event and all you lose is money, and it could be lots of money. But avoiding risk isn't easy, and regulated blue chip companies have high risk too. Apple is owned by many individual investors who love their products and have watched the stock go up for years. The stock hit a high well above $220 a share, and all it took was one great earnings report and the stock dropped 50 bucks. That's right, it was a great earnings report. Sales up 20%, earnings up 40%, and shareholders got crushed, losing more than 20% on their own Apple investment. Investors who loved the earnings report and couldn't understand why the stock went down need to learn about the term forward guidance. Apple lowered its forward guidance for their expected sales during the important holiday season, and many professional investors sold their Apple stock. There are so many types of risk in buying individual stocks, and I am learning about new risks every day. In previous videos, I have warned investors not to buy stocks that trade on the OTC exchange. Stick to the NASDAQ or New York Stock Exchange listed stocks because they're required to report to the SEC, and there's much lower risk of stock fraud. A few weeks ago, a company, which I won't name, but was listed on the OTC, dropped 70% in one day after its CEO was arrested for stock fraud and manipulation. Staying away from the OTC stocks is really important if you like your money. Now, I'm not telling you not to buy stocks. What I'm saying is to do as much research as possible and don't put all your money in one company. Buy at least 10 different stocks across several industries or buy funds. I would like to keep the conversation going about investment risk. If any of you have interesting stories of risks you've seen in the market, please share them in the comment section and I will be sure to reply. So there you have it, my thoughts on risk in investing. I'm Vivian, your hot stock girl, and please be sure to subscribe below and check out my other videos for more great investment ideas.